The Brexit debate really seems to be heating up at the moment, leading up into the referendum on the 23rd of June. And to try and gauge the outcome, there's a couple of things we can look at. And one is the opinion polls. And the most recent polls I've seen suggest about 50-50. So not really telling you that much. And actually you can question how accurate those polls can be. We only need to look at the last general election to tell that. If we look at the bookmakers, they're more recently more positive and actually remaining in with a likelihood of about 75%. And this has certainly increased following President Obama's comments recently on the implications of trade. So just taking a quick look at what a Brexit could actually mean. Well, there's certainly a lot of talk about growth, and in a Brexit scenario, growth could be slower and that could affect GDP numbers. Also sterling. I think sterling would be weaker in that environment, but then we have already had some weakness in sterling already this year, pricing that in, although a recent bit of a bounce up there. So really, for me, the implications really are the increased uncertainty and volatility, and no one really likes that in our world. And that could go on for some time. There's an allowable window of about 2 years when agreement can reach place, and actually, if all parties agreed, that can even be extended further out. So there really is a time period where that could be quite a lot of uncertainty, which clearly the world won't like. Now, if we actually look at what could happen in the stock market, there's a debate that actually the stock market wouldn't be influenced that much because it's so internationally orientated. I think potentially that's a bit short-sighted, particularly if it's affecting the underlying economy and the currency as well. But just for a moment, let's think about what the fund managers are doing. The fund managers we've been speaking to recently, the guys that actually manage UK equities, well, they're not really dramatically shifting their portfolios at the moment. Potentially at the margin, they may be going more exporting orientated because of it, but really this is seen as a binary event and something people can't really plan for with a lot of uncertainty. I really think that the changes would become if a Brexit was to be voted that we actually leave the EU.